That's a great story. Well, we're talking Money Tuesday and your money and where you should invest your money in 2015 this year. Michael Wagner from the Welch Group joins us to take a look at that. Before we do that, we've seen the market hit 18,000. It's dipped a little bit lately, and when it has dipped, sometimes you think maybe that's a chance for me to get value. Are there still places to get value right now?
Absolutely. We see there's a lot of value in the market right now. Obviously, the stock market has been kind of on a tear since 2009. You have seen a pullback, and that's kind of when we talk to clients about adding more money to when you see kind of these pullbacks. Especially you're seeing a lot around oil right now. Oil prices have dropped to where they're below $45 a barrel. So you're seeing some of these energy companies that have a really good dividend, strong balance sheets, that could possibly be a great value right now.
All right. Now, so for people who may be thinking about rebalancing your 401k, you're thinking of looking at some other options in terms of your investments, determining about what your age limit is and what your risk level is. Let's talk about some rules you guys follow. Let's talk about rule number one.
The first rule would be anything that you expect to need in the next 24 to 36 months, we'd recommend having that in cash or a cash-like investment. Something like cash CDs. You're not getting a lot of return on that, but it's very important to have a safety net, some emergency reserve there, so the short-term needs that you have, that you won't be putting that money at risk in the market.
All right, now talk about, though, I guess rule one, it can kind of relate to retirees, though, as well.
Absolutely, and for retirees, I'd expand that out from 24 to 36 months to maybe somewhere between 5 to 10 years, because you really want to have the cardinal sin in investing is having to sell stocks when they're artificially down. Right. So in 2008, 2009, you wouldn't want to have to sell stocks because you wouldn't have gotten the rebound that's happened since then. So we'd say at least 5 to 10 years of set aside money that would be in some type of bonds, maybe tax-free bonds or taxable bonds, that are there so you know that where your money would be coming from.
Something a little bit less risky. But now let's talk about that real quickly, though. As the economy seems to be improving, what about bonds? What about interest rates?
You know, interest rates, the Fed has come in and said they are really in no hurry to raise interest rates. They are hinting that toward the end of the year they will increase interest rates, and as interest rates increase, bond prices fall. So on bonds, we're recommending to be fairly short on the maturities of bonds, so you're not subject to the increasing interest rates.
All right, talk about rule number three, building the foundation of your stock portfolio.
And having talked about bonds and interest rates being so low, we think the growth of the market is definitely in the equity side. Our favorite place is big dividend paying blue chip stocks.
Okay.
Those have done extremely well. They have great balance sheets. And for example, for the oil companies, they had the big balance sheets. So these other smaller oil companies maybe can't pay their debts, they are great targets, and these bigger companies can go out and acquire those.
So you're saying maybe you would want to lean towards maybe a Chevron or Mobil or Exxon?
Absolutely, those are great suggestions.
All right, rule number four, you say it's optional, and again, this depends on your risk level, right?
Correct, and these are the big blue caps, so that would be the foundation, would be the large companies, but you also could look at some of the smaller companies or some of the international and emerging markets. The international and emerging markets have been beaten up recently over the past couple of years, so there's great value in those.
Hey, real quickly, if you need help with some of your finances, getting those on track, there is some help for you. That's to mark your calendar, Saturday, March 7th from 9 till 3. This is a free event at Carver High School, and we want you to get it on your calendar today because we'll explain more about that event as it draws near the Alabama Money Expo for 2015. All right, more ahead here on Good Day Alabama. Stick around.